Hey everyone, welcome to another edition of our Smart Investing Weekly Stock Analysis, where we break down popular companies using fundamental analysis and provide advice that is truly unbiased and has no strings attached. And again, if you like this video here, don't be afraid to hit that subscribe button below, as again, this is a weekly video, so we'll be coming back with good stock tips and good companies to watch out for. And I said, I'm just kind of going back on that now. I said, popular companies. We're going with one that might not be as well known, but it should be a popular company, especially as we're starting to talk about inflation nowadays.
And Chase, I was thinking we shouldn't tell a lot of people about this. Let's keep this a secret because this is great information. We don't tell the whole world what we got going on here. So let's just have a few people listening. How's that?
Yeah, well, hopefully, we kind of keep some other good ones for our secrets too. We haven't bought this one, so
Yeah.
not
You
yet.
won't find this anywhere else. So, but what do you want to start with? You want to talk about the inflation, the that is transitory. What do you want to start with there?
I think maybe we just talk about inflation. I mean, it's been something that a lot of people have been kind of starting to get concerned with. I mean, we talked to a lot of different clients, a lot of different potential clients, talk on our radio show as well, and that seems to be a concern that a lot of people are bringing up now. Is what about inflation? What are our thoughts of inflation? I mean, we saw CPI come out this week, which is the Consumer Price Index, and it's a way to really look at overall inflation across the U.S. and it includes retail, includes some housing prices, includes a bunch of different metrics to get a good gauge of inflation. And the numbers we saw here was a 0.9% increase month over month. And that was actually the highest that we've seen in that month over month percentage gain in 13 years. But the number that gets me is you go year over year, we're at 5.4% on that basis, which is, I'm going to say, substantial. And that was the highest increase in nearly 13 years. So, I mean, we're seeing numbers that we haven't seen in over a decade.
And Chase, I've actually lived through the 70s when we had the inflation at 12%, 14% per year. Actually, that 0.9% works out to be almost, what, 10% plus, which is rapid inflation. But one thing that kind of worried me, which you mentioned these CPI numbers, well, the PPI numbers, which is the producer price index, this worries me more because their numbers, the PPI came in at 7.3% year over year. Now, that was above the estimate of 6.8. What worries me about this is that producers right now are absorbing some of those higher costs. They're not going to do that. They can't do that forever. And that's going to be passed on to the consumer as well. And I do know the CPI, one thing that really boosted a lot was used car prices. And I've never seen used car prices, I think about like 10.7%. So we are battling inflation now. The big question is it transitory, like the Fed is saying, or is it here to last?
And I think they're really overblowing the term transitory, but I also think other people are going overboard with their concerns. So I'm kind of in that middle camp, so to speak, where there's going to be components that are definitely transitory. I mean, last time we saw Chairman Powell actually talk about his reasoning behind why he thinks it's transitory and kind of pointed to lumber prices, how we saw this huge surge and then they pulled back 40%. I mean, we're seeing this huge supply chain crunch at this time where you're going to see, I think, these huge price shocks that will level out. But the problem is that's not going to be across all industries. I think that what we could see is we could see this transitory inflation that could be, let's say, 5, 6, 7%. But then the stabilized, normalized rate of inflation could be around, I'm going to say 3 to 4%. That doesn't sound like a whole lot, but that could be very costly to many savers, retirees that have a lot in cash.
Yeah, and actually we've had for years now inflation around 2, maybe 3%. So we've had very stable prices. Going forward, we are going to have more inflation. But what happens with an inflation? It many times corrects itself because we're seeing that already. Well, people saying, well, the price of lumber is now, we'll say, up 100%. That's not the number at all. But what it does, saying, well, you know what? Maybe I won't build that deck. Or the price of chicken has gone up 50%. These are just ballpark numbers, nothing real here. Well, maybe I won't buy chicken. So what will happen is that as the demand is there, there's going to be more production of those commodities or chicken or whatever you're looking at. But if the demand tapers off where I'm not going to pay that price, it will come down. So you got to look at the whole basket of what's going on. And the big problem we've talked about before, there's just too much money in the economy and everybody's spending it. And that's causing too much money chasing too few goods. But I think it will taper off somewhat in the months to come.
Yeah, I mean, you kind of point the idea of the deck. Well, some people might be saying, "Well, I got a lot of money right now. Who really cares if lumber's way up? I'll just do the project anyways because there's so much money in the economy right now." So that is a good point. I do think that for the average person, it is kind of going to create that conscious decision of saying, I should probably hold off on this project. I mean, it's just ludicrous where some of the prices have gone. And I mean, especially car prices. I mean, new car prices are already expensive. Your cars depreciate so quickly when you drive them off the lot. And then now your used car prices are appreciating so much. It's like, well, what do you do? You're in a tough spot. But again, that's where I think it's a balance between transitory and sustained inflation. And you got to be careful and you have to start looking for, in my opinion, inflation hedges and where's the best place to be putting your money for inflation that we haven't seen in years. Because don't forget, for the last, gosh, what are we calling since well, the last 10 years, we've seen inflation under the Fed's target of about 2%. So we have not seen much inflation at all.
Yeah, and what people have to do is they have to be wiser with their shopping and look for those deals, look for things on sale. And one thing I did, gosh, on our social media, I think it was like a year or two ago, I did a post. I was at one gas station here and I was paying, I forget the number, just throwing out numbers here, like 2.90. I looked across the street and it was like 3.10. But there's people there. Why in the world would they pay 20 cents more for a gallon of gas? We just walk across or drive across the street and get less. We have to do more of that because if you start doing that as a consumer, the prices will come down. But but people still go to those expensive gas stations. There's one, and you know where we live. You know what station it is. I think it's a Shell station on the corner.
Yep.
They're charging the highest I've seen, and you still see people going in there getting gas. Why are they paying? I think it's 4.50, 4.54 a gallon now.
Yeah, I mean,
Crazy.
it's crazy. And I was just in Florida this past week, and it was 308
You're
for
bragging. You
gas.
bragging there.
I know we're not talking about gas, but I was like, gosh, I had to bring that up. I mean, for people that are watching this outside of California, we were in San Diego here, and I got back and I saw that gas station at 450. I was like, I just saw it at 308 in Florida. How can it be such a big difference? But that again is another thing that gets factored into the CPI calculation is energy, and I really don't see energy prices declining substantially over the next few years.
Well, part of the problem is that we've cut down the supply. So, and it's just, I don't get too far off of here, but you cut down the supply, we're now back to dependent on foreign oil again, which is ludicrous because they can kind of do what they want to do. And they now know it's no secret the United States cut down their pipelines. Well, the oil producers overseas, like, we know they ain't got it. We got it. So, again, if you got it, you can charge a higher price. So I would love to say, don't worry about it. Gas prices will come down. I do not see them coming down because of the shortage of supply that we actually going to be producing.
And you'll see some regular kind of cyclical changes to it, but I don't think here in California we're going to go back to $3 gasoline anytime
Yeah,
soon.
right.
Well,
Especially with the amount that we pay in taxes here in California. So,
but with that said, I do want to kind of revert back to our concept of where should we be putting our money with the inflation we do see coming. Where's a good place for an inflation hedge? And really one thing that we look at here is where's an easy place to raise prices that aren't really going to deter consumers because you still need it. A big category for that is food.
yeah.
And we want to take a look here today at Archer's Daniels Midland. The ticker symbol for that one is ADM. And to give you a little bit of a background on what they do, they actually kind of procure, transport, store, process agricultural commodities, products, and ingredients in the U.S. And I mean, what they'll also do is they transport the agricultural raw materials like oil seeds, corn, wheat, oats, and barley. They're also engaged in agricultural commodity and feed product import, export, and distribution. So they're kind of on, I'm going to say, the front end of this rather than the back end of the food companies. You may have never heard of them. You might have heard of the big dogs like, Kraft Heinz, maybe Tyson Foods. Archer Daniels Midland many times will supply food companies so they can provide food for their feedstock.
Yeah, we'll kind of say they're the start of the food chain. Is where things actually kind of start with them. So, but again, it's nice to kind of start there. And we do think that all food companies, well, not all, I shouldn't say all, but food companies, they will be able to raise prices, which again will be passed on to business owners. But I don't want people, and business owners are stockholders, I don't want people to think, oh, this is going to be great. It's going to be fine in 2 months. It's not going to be 2 months. You're a business owner, you own the equities. This will happen over time. And what you look at when you're investing is buying businesses. That's what we do at our firm. We'll see asset management is to buy companies for the next 3 to 5 years. And this is what you do. You find good companies at good prices. So should we talk about Archer Daniels Midland, or ADM as we call it?
Yeah, let's take a look at the fundamentals behind the business. Is always the most important place to look if you're considering investment in a company.
Yep. Let's start off with the PE ratio. Very important. What you're paying for the earnings based on the price of a company. Very good for ADM. It's 16.1. That number means nothing at all unless you have something to compare it to. So we compare the industry. The industry, 23.98. So very good price there on the price to earnings. Wow. Is this correct? Yes. Price to sales, zero point 0.5 versus 1.49. That's a winner. Price to book value, 2.1. You compare the industry. The industry has no price to book value, which means that the liabilities actually exceed the assets, and therefore giving you no equity. So you don't want that in these other companies. Archer Daniels Midland is very good on that. Again, 2.1. Price to cash flow, 10.8. That is slightly above the industry at 10.5, but I'm okay with that. They do pay a pretty reasonable dividend, 2.5%. What's a 10-year treasury now? 1.3, 1.4. So you're getting almost double that with a nice dividend from Archer Daniels Midland. And they only use 39% of their earnings to pay that out. Now they are growing their sales, and I think you will see this grow more going forward. But right now, for the last 12 months, year over year, they're up 6.15%, which is above the industry at 6.07. The earnings have done extremely well, up 33.6%, also above the industry at 28%. So again, nice growth in the sales and the earnings. Look at the balance sheet, very important because you don't want to get into a company that's going to have financial problems. Archer Daniels Midland looks very strong with a current ratio of 1.59 versus 1.36. So it tells us that they have a very good capability of paying off the next 12 months of liabilities with 12 months of liquid assets. So no concern here on a liquidity problem. Debt to equity also looking very good, 53.7 for Archer Daniels Midland versus 69 for the industry. So again, not worried about being late in debt. They've got a nice balance sheet here. Reducing return on equity is 10.4 for Archer Daniels Midland versus 11.7. I'm okay with that. We also see the net profit margin for Archer Daniels Midland checks in at 3.1. Now it's half the industry at 6.2, but you want to kind of check on the turnover. They could be doing a lot more volume, therefore a lower profit margin, but you do want to understand those numbers. So kind of look at that a little bit deeper, kind of invest in this yourself. Reducing receivable turnover, very important for business, keeping those receivables turnover 23.9 for the last 12 months versus 12.8. Very important to turn those receivables over so you can use that cash. And then lastly, inventory turnover, 5.9 versus 6.1 for the industry. I'm okay with that. I think that's pretty good.
Yeah, I'm just curious on their numbers. I mean, always if they have that big discrepancy on the profit margin between them and the industry, I wonder if they had any write downs or something occurred that was a one-off event that affected their profit margin. So I got to understand a little bit more of the story as you said there. Well, let's take a
And
look
Chase,
here.
I can say these are secrets that people use behind the scenes, opposed to just going out and buying a stock, is to actually look at what the business is doing. That's what we're sharing with the people, is to really understand the business so you don't get caught with something where it drops 20, 30, 40%. Like, well, why did that happen? Could
Yeah.
be because what you're kind of talking about there. So understand the numbers.
Yeah, especially if you have a company that's got a lot of like commodities like corn and different types of like barley and things like that. If the agricultural products actually depreciate in value, you got to mark that down on the balance sheet, which could really hurt your earnings for a particular quarter. It's called the lower of cost or market. If that occurs, it hurts your earnings in the short term, but it's not really a cost to your cash flow. It's more of a balance sheet adjustment, but it's just the way the accounting works. So it's not a big concern. And it's so important, as you said, to understand the numbers, not just go with, oh, the PE is good. You got to look deeper.
Not
Well,
more to it.
yeah, let's take a look here at the current price for Archer Daniels Midland. Again, ticker symbol here, ADM. It's $58.21. I'd like to see this 52-week high, $69.30. So we've seen a pretty substantial pullback in this stock. And the 52-week low, $40.22. It has risen off of that, but gosh, I think it's hard to not be off your 52-week low after going through COVID last year. Going out to December 2022, though, I do see estimated earnings per share of $4.47. What we want to do here is take our 16.6 multiple. We get a nice target sell price of $74.20. So that's about a 27% appreciation in the price. We normally like to buy things when we have a 30% margin of safety. So I'd be a little bit patient with this one, but I think there's some good potential here. What do you think? You like it? What are your thoughts?
I like it. I mean, it's just something that you do want that little pullback for it because, again, you don't want to get too greedy with it. Patience, very important when it comes to investing. It's really be patient. So, and then watch it. I mean, perhaps the earnings go up next week. They usually come out sometimes on Mondays. We kind of look at them. So either the earnings have to come up a little bit, or what has to happen is that the price has to come down, and we could be going through a little market correction here. So we'll see. So be patient before you invest in ADM.
Yeah, and I do like this here too. I did want to take a closer look at the range investments. You can see the high is $5.20, the low is 375. Standard deviation between them is about 0.36. You're not seeing a whole lot of discrepancies there between the analysts, which I like to see. It's a pretty sound, tight range, especially if you consider there's 15 estimates. I do like to see those numbers here. I do like it, as you said, but definitely I think it's going to require a little bit more patience on it. But again, that patience pays off. And the big thing that investors often do too is they get upset with themselves if they miss something. But the
Right.
nice thing is there's a lot of opportunities. There's a lot of different stocks out there. So be patient. Your opportunities will come. I believe Warren Buffett said the nice thing about investing is a zero strike game. And you can wait for your pitch. You don't have to swing at everything.
And Chase, I tell people, be like a successful doctor and have a lot of patience.
I like it. Well, anyways, thank you so much for joining us today. If you like the content, please be sure to subscribe to our YouTube channel for upcoming stock videos. This should not be used as investment advice. It is for informational purposes. If you are interested in learning more about our investment philosophy, visit our website, smartinvesting2000.com. Again, that's smartinvesting2000.com. And you'll find out more about who we are, our investment firm, and again, why we use the investment philosophy that we do. Again, be sure to tune in again, and we'll talk to you soon.